Following a flirt with national disaster at the Euro summit in early July, when it was actually for the first time a political prospect or possibility that Greece would have left the Euro area, we have now, in my opinion, reached a turning point, and following the recent two overwhelming votes in the Greek parliament for a new reform program, I think the country is actually well on track for what might be the third but also successful bailout package. Because in my opinion, what the country really needs more than anything is political stability. And ironically, following the referendum, which opposed austerity, we are now in a situation where the Prime Minister, Alexis Tsipras, actually commands the support of close to 3/4 of the Greek Parliament, as well as the support of the Euro area creditor countries, which have their own reasons to support this deal. So provided that we can avoid kind of political instability that has been so prone in Greece, I think the country is well underway to achieve in the next 6 to 12 months not only substantial debt relief, but also a substantial monetary policy easing, a restructuring of the banking sector again, but nonetheless a foundation that will see the economy begin to rebound from what has clearly been a very, very traumatic 5 to 6 years of recession.
Jacob, I don't fundamentally disagree with you, but I think there are a lot more pitfalls on the way to prosperity in Greece than you think there are. When I look at things like this, from my experience, I try to be a pragmatic optimist. An optimist says they hope they will have success this time, but pragmatism leads me to have my doubts. I think there are essentially two types of pitfalls, or categories of pitfalls. They come under the general category of political economy. On the political side, notwithstanding the support that the government appears to have in Parliament at the moment, it is not clear that slogging through all this over the next 6, 12, 18 months is going to be successful. We find reform fatigue is a standard problem in these kinds of cases. And there's a possibility that things will fractionate again. And on the economic side, clearly having dug themselves a very large hole in many respects and moved back from what they had already achieved in terms of fiscal adjustment and some structural reforms, they now have to start again and to climb out of that. And the number of rungs on the ladder are sufficient so that there is this risk that they will break through some of those rungs on the ladder. And then the question will be whether Northern Europe is going to tip the ladder over into Brexit. So if I had to bet, my standard family 25 cents, I would say we're likely to have Brexit within the next 18 months.
No, I mean, I guess there's certainly a lot of pitfalls, but I think in this time, ironically, in my opinion, as a result of the now politically feasible Brexit all of a sudden, I think that actually is, and this is in my opinion also, while I consider Wolfgang Schäuble's proposal for a temporary Brexit sort of analytically deceptive and misguided, there's no doubt that the political function that this latent threat, if you like, serves is to keep the Greek domestic politics in check. Because if we look at the sort of political timeline over the next 6 to 12 months, there is a lot of important deadlines that it is very much, in my opinion, in the Greek government's interest that they reach. The first one is the one that's very imminent, which is the July 20th payment to the ECB of about 3.5 billion euros, which they will have to reach an agreement with its creditors to be paid, either through an actual program disbursement or through a new bridge funding facility, etc. The second one, which is probably equally important, is that the Greek government last week approved the new banking refinancing and restructuring directive, which basically sets out mandatory creditor bail-ins in Greece come January 1st, 2016, setting the stage for a very strong incentive for the Greek government to agree to a restructuring and recapitalization of the Greek banking system before that happens, so that they can avoid what will be significant haircuts otherwise of unsecured depositors, which they certainly will have no interest in, or for that matter, neither will the creditors. But the point is that there is actually, in my opinion, a lot of pressure points that the Greek government will need to fulfill. And at the same time, we do have this threat on the other side, where the IMF has told, not least the Germans, that look, if you want us involved in this, which Angela Merkel does very clearly, you need to put up some debt relief. And that was also what was in the agreement of the Euro Summit, which very clearly says that if you have a successful first review, after that we can talk. So my prediction would be that everything relevant in this third program, whether it's pension reform, product market liberalizations, austerity, etc., will be front-loaded. Everything will be basically done by the first review, so that Alexis Tsipras can essentially swallow hard, do it, and then 6 months from now tell his people, look, I am the one who cleared up the mess that I created myself and got you debt relief.
Except you probably leave out the created myself part of it, but
Yes.
or I have created, or I was a handmaiden to. I think you're right, and obviously it makes sense, always makes sense politically to front load this stuff, and blame the previous government, even if the previous government was you. You know, the Mitterrand U-turns. We've seen that before. One important, it seems to be, wild card in all this is this question of one thing that they were forced to do was the capital controls. And getting those off is going to be complicated. One wonders a bit whether they don't need more help from the ECB on that process to essentially float the capital controls and finance the capital controls. Maybe they'll get there politically. If they do a little bit more, they have one more round of this sort of prior actions on the legislature. But it seems to me if they can't get the capital controls off, it's going to be difficult, because the economy will tend to further nosedive, which has implications for the revenue side, and given the way the system works, which I think is nutty, where, you know, just because the denominator is going down, that means you have to work harder on the numerator, and then you get more austerity on top of austerity. And moreover, once you have controls on, unless you take them off right away, they tend to have their life of their own, because it creates new opportunities for rents. So it seems to me that is one of the wild cards here, is unwinding the capital controls.
No, I mean, I absolutely agree, and I think that it would be a little bit like the Cypriot situation, where you started initially having blanket capital controls, which were then gradually lifted. And actually, in the case of Cyprus, only after a few months were the truly binding capital controls lifted on actual withdrawals, retail depositor withdrawal limits, as well as the large, small and medium-sized businesses' ability to wire money in and out of the country. And that's actually already beginning to happen in Greece. The cap has now been lifted for international transactions for businesses to 100,000 euros. What has not been lifted is, of course, the retail deposit withdrawal limit, which is ironically, in my opinion, the one that's really politically important for Alexis Tsipras. This is the one he needs to show his people that we're returning to normal.
Yeah, I think,
and he needs ECB help to do that.
I mean, the ECB raises, it seems to me, the broader question. It relates to the debt relief that you and I agree on, as well as other things. So to what extent will there be broad support for the effort coming from Europe as a whole in the form of the ECB? There is, people say that once they get out from under this, then they will become eligible for the QE. Whether that's going to happen, that will require presumably a decision, at least de facto a decision, if not, or at least a decision whether they've formally set it up as a decision or not. And then the question is other dimensions of European growth and so forth and so on, and investment and so forth, and whether that will be a problem. My issue in terms of the program as a whole has been that what is essentially a euro area problem has tended to be treated in the various cases as a national problem, and that is added to the fractionization of the European Eurozone in terms of the way it thinks about this. So they're thinking increasingly more nationalistic. So a lot has to do with sort of what even happens to Europe as a whole, and how fast the demand for tourist services come back, if you want to think about that, in Greece in this process.
I mean, I don't think there's any doubt that the ECB would play a key role. And I certainly would be very surprised if Greece was not more or less automatically eligible for QE. As you said, there is an implicit, sort of almost passive-aggressive decision being taken here. But the ECB and Mario Draghi has always said we're a rules-bound organization, and if Greece, which
we make up the rules as we go along,
to a degree, but they have also been very explicit about the eligibility for this. There needs to be a program. It needs to be well underway towards implementation, and the country in question needs to be below the 25% ownership limit threshold, which will be the case after the repayment by the Greek government or whoever it is. When the ECB gets paid on August 20th, they will be below the threshold again. And therefore, provided that the program is negotiated and being underway, I would certainly expect them to be QE eligible to later this year, unless unforeseen things happen.
One of the problems there is the content of the program, right? Which I think we agree that it's going to be very intrusive, probably even more intrusive than the previous programs.
Absolutely.
It will be more structural, there'll be more emphasis on prior actions. In some respects, that's probably in the interest of the government, even though it will stir up the politics to some degree. The politics may be broken. But the question, I think, is the timing of all this, and when actually the debt relief kicks in. So is the first review? So the first review, which is apparently past the first review. Well, if you delay the program start, and the first review is not until a year from now, right? Well, will the political process in Greece wait that long? In some respects, I think we probably agree that the debt relief, in some sense, at least other than the cash flow component, which presumably will be taken care of in the program itself, the debt relief, in some sense, is a political issue, since once you've smoothed out the payment schedule, it may be large, but it's stretched out over a long time, and won't become lumpy. But it becomes even more a political issue. And on the other side, the Europeans can say, well, we don't really have to deal with this because the obligations are so stretched out to begin with. Now, maybe they'll end up stretching them out even more. But that's another, seems to me, sticking point where when the carrot gets delivered relative to the stick of the austerity.
Well, I think, there's no doubt that this is a very aggressive timetable. And as I said, as far as I read both the announcements from the Eurogroup president and the Greek government, they're basically aiming to have the program negotiated by August 20th, meaning over the next 2 to 3 weeks. And then subject to, national procedures in other Euro area countries, etc., I think it's entirely realistic to have the program negotiated and become operational come early mid-September. And then, I think you could have, because everyone has an interest in having this front-loaded, including the Greeks especially, having a review after the first 3 months towards the end of the year, setting up the carrot, so to speak, to be negotiated for the first quarter of 2016, conveniently in time for the expiration of the fund extended facility, which expires in mid-March 2016. Because I entirely agree with you that if this was over the course of a year or so, I don't think the domestic politics in Greece would hold up. It's imperative that Alexis Tsipras essentially has this relatively narrow window where, as I said, he needs to swallow hard and then promise the goodies down the line.
Well, I think the important question, I think we agree on, there's both the domestic side of that in terms of being able to get the carrot earlier. You have a very optimistic, if I may put it that way, scenario. The question is whether other politicians, if you want to put it that way, in Europe, whether it's in Germany or France or the Slovak Republic or whatever it is, will go along with that, including the debt relief component of it in that time frame. So there is a politics on the other side, perhaps certainly accelerated by the more open talk of Brexit, right, and the press, wanting to, partly because it's summer and you can't talk about anything else, right, fanning the flames of the Brexit option, if you want to put it that way, which is an option that some people see for Greece on the one hand. That's sort of the economist argument for Brexit, and then you see as an option on the political side for the Europeans. Let's just forget this problem and get them out of here, and we can go on about our business. So there is this tension, I think, and that's why a lot of things have to come together in order to make it really successful, and why you have to be really optimistic to think it's all going to come together.
There's no doubt that mine is an optimistic view, but as I look at it, 79% of the Bundestag approved this, with the clear understanding that, as articulated also by Angela Merkel in her traditional big public summer interview on national German television, that after the first review, we're going to sit down and have a talk about debt sustainability. The red line in Germany, which is a political one, they claim it's a legal one, but it's obviously politics, is they don't want principal haircuts. But there is, in my opinion, plenty you can do. I'm not saying this is the smartest way to deal with debt sustainability in Greece, but in a politically sustainable way in the other euro area countries, is to give them a grace period of 30 years and a 100-year maturity, or whatever the number is, so that essentially you take the majority of the Greek debt stock and you lock it in a drawer somewhere at the ESM for a generation or two.
Yeah, well, my view is you're going to go for 50 or 100 years. Why don't you go forever and turn it all into consoles, which probably is a harebrained scheme, but one which I think might be considered, because effectively you're doing that if you're going to go this route of having no haircut on the principal. In some sense, you say will never be a haircut on the principal because it's never going to have to be repaid. In some sense, it makes some logic. I want to record the fact that you, as the resident moral hazard freak here at the Peterson Institute for International Economics, now have turned yourself into the resident optimist. And the question is whether this Jekyll and Hyde act that you're putting on can be sustained over the next 6 months.
Well, there's no doubt that I think in a currency union that lacks unified political institutions, it's always been my position that political moral hazard will loom large inevitably, and it obviously has. If you look at all the initiatives that has been taken in the euro area since 2010, has been, shall we say, of various degrees of conditionality. This is how the monetary policy works in the Eurozone now with the OMT program. The lender of last resort in the euro area is conditional. Obviously, the ESM fiscal aid is conditional in the same way as a normal IMF program works. So I certainly do believe that this has been the dictating political orientation since the crisis began. But I also think it's inevitable, given the institutions that you have. But I will say that the important thing about this latest Grexit development is that, for lack of a better word, moral hazard won. In the sense that if you had, and this is actually, in my opinion, good news, because if you are Germany or other creditor countries and you were kind of worried that a country like Greece, by simply being recalcitrant or incompetent or whatever you want to call it, could ultimately generate transfers through the back door without being forced to reform in the process, well, the developments in the last 6 months will have proven that that's not the case. That in fact, because of the draconian, admittedly, arsenal of coercive economic and financial measures that Greece has been subject to in the banking system and elsewhere, they have come around to where they are now supporting a new program. So from a moral hazard point of view, someone like me actually feels relieved by that. And therefore, I'm actually very optimistic. And I think that people who have the same mentality as I do in Germany and elsewhere in the Eurozone should rest and sleep better now, because the existing status quo has turned out that the risk of a transfer unitary backdoor is not really there. And therefore, it should be easier, in my opinion, for Germany and other countries to now have a serious discussion about more integration in the euro area, both on the political and on the fiscal and economic
Well,
side.
so the question really is, I would put it the other way, as a question. Maybe you established moral hazard, discipline, if you want to put it that way, as the principle, conditionality. Have you paid too high a price for that? So the other side of that is that we now no longer have a situation in which you, at least through the front door, you have an opportunity for the one nation or one people or one part of the Eurozone to help the other one. You have to go through a process by which you nail yourself to the cross. And I hope you're right in some sense in terms of the long run, but both in terms of Europe, but also in terms of Greece, the price may be too high. And you say there is some part of this is a shell game in terms of help, because certainly the northern Europe is helping Greece and southern Europe anyhow, right? And they perceive it in their interest to do so, which is actually what you want. The problem is it's very grudging perceiving, and that doesn't make for a lot of communality.
No, I mean, I completely agree. And therefore, it's actually very, very important that the German government and the other northern governments recognize this, and therefore that they are now willing, having quote unquote been able to largely implement their view of rebalancing and restructuring on the peripheral countries, that they need to recognize that they need to deal with also the, shall we say, spillover or effects of their own moral hazard focus. And that means more integration in the euro area, because we clearly need to get back to a situation where the Eurozone, euro is genuinely irrevocable in all member states. I absolutely agree with that statement.
So we let Jacob have the last word as an optimist.